So the earnings season is in full progress, and I'm here to share with you an incredible pattern that can put 10, 20, even 50x into your pocket trading weekly options as a result of this information. So it is apparent now we're getting daily confirmations that the real economy is absolutely collapsing, meaning businesses that are associated with the real economy are absolutely collapsing, while AI appearing to be absolutely non-stoppable. So today is just like a perfect example. I'm going to walk you through this. I mean, you have Federal Reserve that's like, hell no, we're not cutting rates, right? In the market, finally, oh my God, whoa, we haven't had a 30-point drop in ages, right? So finally getting a 30-point drop on S&P, and shortly after you got two AI-related companies that are announcing earnings, and all it up. Hey, it don't matter what the Fed do anymore, right? It's all about AI. This is how crazy and fucking wild this market is. So not only did the 30-point loss after the Fed Powell speech is now erased, but now you got green candles everywhere as a result of Meta and Microsoft earnings, right? Well, we knew not to fucking trade those two earnings reports, guys. And speaking as far as the actual economy, I mean, you can contrast this with earnings from ALGN, ticker ALGN. That stock is down almost half. I mean, we were buying puts on ALGN around 204, 205 area today. After hours, I mean, the thing is, like at the time I'm recording this, it's at 128. Holy shit. I mean, this thing almost got slashed in half. But bear with me as I'm trying to walk you through the way these dominoes are actually falling. So basically, the AI story seems to be untouched. Okay, and clearly, the bigger these AI earnings getting, the bigger these AI influence and relation to the overall size of the S&P 500, the more difficult it is becoming for the S&P to make a downward move. And clearly, when these AI stocks are advancing, then S&P is also advancing. Now, that is no longer a good representation of what real economy is doing. And I can go with you earnings report after earnings report after earnings report and show you how crazy this shit is. But I'm just going to give you a couple of examples. So, for example, this morning, we lost money on Starbucks. We made money on CAR, C-A-R, which was Evie's budget car. And, I mean, of course, the gains on CAR far exceeded the loss on Starbucks. But the point is, these two companies, okay, they are real economy companies, okay? And if you were to just zoom in on the earnings of Starbucks, now clearly if you're listening to like some bullshit CNBC, oh, they beat on earnings. No, Starbucks did not beat on earnings, damn it. It was a horrendous fucking report, absolutely horrendous. Yet Starbucks managed to pop after hours, and I'm sitting there looking at the fucking chart. I'm like, man, what the fuck are they smoking? What is there's another announcement coming? Like Starbucks now being acquired by some AI companies. Now you're gonna have fucking robots serving coffee at Starbucks. Like, what the fuck am I missing here, right? I'm sitting there because the actual earnings report is like, okay, we're beating on revenue. Now, for those of you just like, even if you're brand new, let me just break it down, okay? If prices are going up, like inflation, okay, the component of the stagflation, right? When the economy is slowing and prices are going higher, that's stagflation. Now, part of the stagflation is the increase in prices and costs. So for that reason, right, if Starbucks or any other company that's, for example, sell some kind of physical product, okay, if your cost on that goes up, all right, then automatically, if you make about the same number of sales, what's going to happen to your sales number? It's going to go fucking higher. So how difficult is it to beat on the revenue number or sales number? It's not, because businesses are forced to do what? Raise their fucking prices, okay? And so Starbucks is no exception. They raised their prices. That's how they beat on the revenue number. Now, normally you would think, okay, well, if the revenue number goes higher, well, certainly they're making more sales, therefore they should be making more money. Well, no, their earnings went down, okay, by 30+%. So the expectation number on the EPS number, on net profit basically was 65 cents a share. Well, they reported 50. Okay, that is a huge drop. Okay, when you think of it, going into the earnings report, that number was already lowered by many analysts. So the fact that it came in even 30% lower of what already was expected, that is horrendous report, because it is absolutely a confirmation of stagflation. Okay, that means Starbucks has higher costs. Okay, so now, due to higher costs, even though they're raising prices, okay, they're making fucking less. That's not a good situation. This is not a reason to be buying a stock. This is a reason to be dumping the hell out of a stock. So, shockingly, similar story on CR, Eva's budget rental car, okay? Well, fuck. The expected earnings per share on that were $1.75. They reported 10 cents. Their earnings really were 90% less than what all the fucking, goddamn Wall Street analysts were calculating that to be. Or the expectation of Wall Street analysts was like off by 90%. I mean, okay, what the fuck are they doing there? I mean, they must be too busy calculating their AI profits, okay? Because, my God, that is a big miss. That is a humongous miss. On such a miss, I mean, you should expect something to go down 50, 60 points. Okay, at the lows of the day, CAR was down as much as 40 points in relation to yesterday's close. But the point is, it should have dropped a lot more, and Starbucks should have completely collapsed, right? So we're getting these bad reports that confirm, okay, that companies are making a shit load less, okay? And we're talking about real economy stuff. And we get confirmation on a daily basis because not so long ago, right, we made a like 4-5x trade, 6x on CMG puts, right? On Chipotle Mexican Grill, all right? Fucking misses the numbers, okay? Poor guidance. I mean, that's another real economy stock that used to be an all-time favorite that could do no wrong, and now it's in the doghouse. So if you take a look at this, I mean, every day you're getting a confirmation. Today, ALGN Technology, it's called Technologies, but really it's like, it's a dentist-related procedure that the company is offering to their clients. That's another component of a real economy. And let me tell you exactly how you could be making a shitload of money on some of the earnings reports that are coming up. Now, clearly, okay, the way, like if you're a seasoned veteran trader, you should know. Okay, so when the company misses the earnings for the first time, like, okay, Wall Street can say like, wow, it's a bad quarter, because you got all these analysts that were like looking for a good quarter, and they're like, well, shit, it's just, there's nothing to worry about. It's going to be fine next quarter, we miscalculated the shit a little bit. Next quarter's going to be fine. I mean, it's just one bad apple, but then when the second quarter comes and it's a bad quarter, then it's like, damn, you could see a much bigger sell-off. And then, third strike and you're out. Basically, if the third quarter comes in and you're still missing on the numbers, still missing on some key metrics, then the stock could get really crushed. So what I'm here to tell you is Starbucks, it was like the first quarter of a sequence of bad quarters. So you can't fucking stop me from betting against fucking Starbucks in 90 days when it's going to be announcing earnings, because I know those earnings are going to be total shit. So, but clearly there's a lot of real economy companies that are announcing earnings tomorrow. They're announcing earnings Friday early morning. They're announcing, man, we got 2, 3, 4 more weeks of earnings where day by day there's going to be real companies, okay, that are going to be collapsing because it is no longer going to be their first, well, let's give them the benefit of the doubt kind of quarter, kind of like Starbucks reaction to a horrendous fucking quarter, right? But, apparently somebody shared the same view with me because somebody just unloaded a gazillion shares right at the open. So we overall did okay on Starbucks. If you entered the trade yesterday, yesterday's entry lost money, but this morning's entry, bright and early, I sent the message. I was like, fuck, short Starbucks, add more to car puts, add more to LLY puts, and so on. We had a whole list of shit we're shorting today. But immediately, right, it goes from 98, shuts down all the way to 90. That is not a healthy move, right? That people are getting the fuck out of stock. And so next quarter, that thing is going to collapse. And real economy companies are doing exceptionally poorly. And some of them, okay, it's the first quarter of let's give them the benefit of the doubt type situation. But some of them, like ALGN, I mean, this is not their second. This is not their first. This is not their second. This is like their third. And all the hopes and all the analysts that were still like, oh, no, man, they're going to get their act together. It's going to be all right, man. Look, man, But, guys, you don't have time to keep paying attention to all the little stuff that's going on. But the reason why we put a decent-sized position on ALGN puts today was because, look, you got to know the moves. You got to look at the charts. But sometimes, right in the last few hours of trading, before the earnings report, go look at the option chain. Like, I dare you go, if you are listening to this today on July 30th, you can go pull up the option chain for ALGN, and you're going to see what? Like, look on the call side, right? Somebody sold 2,000 contracts on the call side. And when they fucking got the money from that trade, they went and bought a shit load of puts in 190 and 185 strike. The volume on that absolutely exceeded any kind of, nobody was buying calls on that thing today, right? Everybody was selling calls, and a bunch of people were buying fucking puts. So there it is. Sometimes you just go look what the hell is going on with an option chain, and, it's not just looking at the option chain. It's not 100% a recipe that you're going to lock in a crazy trade like ALGN, but that is something to definitely pay attention to when some big moves like that on the options chain actually take place. And if you don't know how to do that, then that's why you get signed up with 30 market moves and you trade with a coach so you wouldn't miss out on fucking crazy wild opportunities like that. So, the real economy is collapsing. The evidence is omnipresent. We're getting confirmations every day that the companies' margins are diminishing drastically due to higher costs. So even though their revenue number, because the products that they sell, okay, the prices have been raised, their revenue number comes in higher. Oh yeah, it's a beat on revenue. Yeah, buy. Hell no. They're making more revenue, but they're losing money, which means now they need to make more sales just, to get back to their profitability level where they were, 3 months ago, 6 months ago, 12 months ago. In order to just maintain that, they need to make a shitload more sales. That's not a good composition. But due to rising costs, they're actually making a lot less. So just think about it, okay? When the business really starts slowing down, okay, what's the first thing that's going to happen? The sales are going to start slowing down, okay? And if the company is already making less on the same amount of sales or more amount of sales, what do you think is going to happen when sales are going to really slow the fuck down? Well, they're going to make a ton less. And some of the companies that are profitable now, they're going to turn, their earnings per share are going to turn negative. And I'm telling you right now is that moment of transition. It is that moment. So, generally speaking, like if you were to just forget about all earnings for a second, if you were to just short an index, okay, there were a lot of money that were made just within the 45-minute interval today, just, going short in the indexes for a brief moment right during the Powell speech and closing them out like 40 minutes later. And so that trade, I mean, it wasn't crazy, but it made some decent money. And, the one index that would have made you more money than S&P or NASDAQ, it would have been Russell 2000. So Russell 2000 consists of stocks, okay, that don't benefit. They're small cap stocks. How the fuck are they going to compete with earnings of Meta that's got cash, earnings of Microsoft that's got cash, and they're growing faster? Like, look at these fucking reports today. It's fucking insane. These two reports, I mean, their combined numbers are like bigger than the fucking GDPs of certain countries. I mean, that's how huge the gap is. And no shocker that the indexes are not dropping, okay, because you got these companies are growing at such a solid pace, and they're becoming a larger component of the S&P, that, I mean, you look at the index, it's not dropping, but underneath the surface, that there are a ton of real economy companies that are absolutely collapsing. I mean, you don't have to look, guys. I mean, every day there's a company that's making that wild move. I mean, just a few days ago, it was CHTR. It's a cable company. Jesus Christ. It dropped from 390 to 280, and we caught that move. These are some wild moves by some real economy companies. But the reason I'm taking the time to explain this to you is, okay, so you got 5 to 10 companies that are mega cap, that are growing, that are cashed up, that investing money where? Data centers. All right, so at some point, let's just speak briefly in economic terms. There's a term of marginal utility. Basically, to explain it in simple words, think that you're hungry for a moment, and you really like a certain burger, so you're like, oh yeah, man, I'm hungry, I really want to eat this burger. You eat it, and you're like, man, that was good. And you're thinking like, man, I could probably go for like another one, but I don't know. So you eat another one of those, and the satisfaction that derives from that second burger is just nowhere as good as, it's like almost the second burger wasn't as tasty as the first one. And then if you eat the third one, then the derived utility of that burger is greatly diminished in relation to the utility or the tastiness of the first and even the second burger. And so you get the point. The more burgers you eat, okay, the marginal utility of each burger or your satisfaction, it goes lower. So the same thing, I propose for you to try to think of the AI plays in the data centers. Okay, right now it's full-blown mode. Invest. Like what? Fucking Meta is spending like 120 billion in data centers. Okay, that's fine because, well, even though it is apparent to us here at 30 Market Moves that real economy is crashing, it is not yet apparent to everybody. But there's going to be a moment of where that marginal utility of additional investment into the data centers is going to diminish. Right now, we're probably in like a second burger when it comes to the data center investments and acceleration. But pretty soon, we're going to be to the end of that second burger, going on the third one. And I mean, that's when the shit is really gonna fall apart. What I'm really trying to say, there's going to be a moment in not so distant future, and I would say it's going to be over the course of the next 6 to 9 months, where all this investment that seems to be such a great fucking idea at the moment, while the economy seems to be holding up, but underneath the surface, it's clearly breaking in a bad way, where all these investments that are regarded at the moment as such a great thing that's going to only make Microsoft and Meta more money, right? How can they go wrong putting billions of dollars into these data centers? There's going to come a point of where the curve is going to intersect, and marginal cost versus marginal opportunity, marginal utility, guys. It's got a downward direction. So as the economy slows down, which it absolutely is doing now, but it is not yet apparent to a lot of Wall Street participants because they're so focused. Oh my God, AI is going to do so much this, so much this, so much that. Sure, that sounds great. Okay, while the economy is in decent shape, which it is no longer in decent shape, so very close to a moment where who the fuck is going to be supporting all these development if the real economy is collapsing? It is just a matter of time when the artificial, let's call it all these AI plays, let's call it the artificial economy. It's just a matter of months when this artificial economy is going to begin slowing down as well. So you cannot have 99% of the businesses doing shitty, profit margins going down. They have to raise prices, which is, by the way, I mean, everybody's saying like, wow, there's no impact from tariffs. Whoa, hold up a fucking second. What do you think these lower margins for United States companies are coming from? These higher costs of goods, where do they think they're fucking coming from? Yeah, you're already seeing the results of tariffs in this earnings season. And shit is going to get absolutely worse. So, like, 30% drop in profits for Starbucks. I mean, good luck next quarter. This shit's going to be down another 50% as far as profits. And guess, that's not going to be this is the first quarter, we'll give you the benefit of the doubt type shit. It's going to be like, man, sell this shit. Fucking sell. Just like some big fucking bank sold it at 98 all the way down to 90. They probably unloaded all of their fucking position bright and early in the morning. And I'd be like, man, who the fuck is buying this? Are you out of your mind? Fucking sell while we can. Click. Sell some more. Click. Unload. They fucking unloaded all their shares within the first 30 minutes. The stock drops from 98 to 90. So what I'm saying is you haven't even seen the beginning of the iceberg, right? There's going to be a moment when all these billions of dollars in investments by these big top 5, 10 companies are going to be regarded all of a sudden as a liability. Okay, because you're going to cross that point of marginal utility to where, additional investments in data centers is not going to be supported by, 99% of the real economy. Because people, look, that moment is coming, and that's the moment when indexes are going to begin crushing in a big fucking way. I mean, they're going to crash. They're going to collapse. This 50% crash is coming. And, certainly not tomorrow, but god damn, tomorrow is going to be a big black candle day. People will be taking profits tomorrow. It would be fucking ridiculous to not see people take profits tomorrow. So it's going to be a pump and dump day. Be ready for it. Options are dirt cheap. I mean, it's free money. Guys, it's basically free money. If you're trading tomorrow on April 31st, August 1st, on Friday, I mean, it's free money. I mean, these trades are going to generate 5 to 10x. All you got to do is hit the button and short them. Short damn companies that are real economy companies. And I wouldn't be shocked if even on some of these AI gains, I mean, some institutions are going to be like, well, damn it, man. I mean, we'll lighten up our positions at this level. I wouldn't be shocked at that. So, very unique timing in the market. I mean, it's that trend reversal, where, there's such a fine line of how long how much longer, this sort of situation can be sustained because, the whole fucking market is being held up by like 5-10 companies right now. And so I think, the 99% of the market, and I would just look at Russell 2000, all the smaller companies, okay, which is, there's a ton of small companies in the United States that will be, unfortunately, out of business as a result of these big guys basically dominating, making the kind of investments, making the kind of deals that a smaller company simply is unable. So the larger this gap becomes, the more the real economy is going to suffer. And as a result, you're going to see banking sector is going to suffer. I mean, you're going to see credit card defaults going to the roof. I mean, needless to say, you're going to see a real bad situation in the housing market, which is arguably already now is a bad situation. Where times that 50x is how bad things could get in not so distant future. And, once Wall Street begins repricing the valuation. So see, we got in a situation right now where you have clearly real economy companies that are making more sales and making less money. So next quarter, they're going to make less sales and even less money. And yet some of these companies are trading. I mean, the entire market is trading at almost a 23 multiple. Okay, so if the earnings get slashed in half for, 90% of the companies and 10% of the companies are able to grow by, 10%, then where does that put us? That puts us at like 14, 15, 16 multiple. I mean, we're at 23 now. I mean, that's a 30% collapse in earnings overall. I mean, call it 40% possibly. But like that, the market will absolutely be revaluated. The valuation metrics are going to collapse for 90% of the companies in S&P. Certainly, probably 99% of Russell 2000. So there's not an easy trade. Just short the hell out of Russell 2000, utilizing futures on Russell 2000 /RTY. That's got to be the simplest trade at the moment. And it made money today, but guys, I mean, that trade is going to make you so much money over the course of the next couple of months, because Wall Street is still convinced of the broadening trade, right? Well, there's nothing fucking broadening besides the losses for the real world economy companies. Their losses are broadening. Nobody's buying these small caps. So I think we're at the pivotal critical moment where, I mean, it's going to get ugly real quick. And if you miss it, it's going to be like, March, April, where, everybody thought it was going to be okay. It's going to be okay. And then before you knew, fucking S&P was already down by 1,500 points off the high within like a matter of a couple of weeks. So, that moment is coming. And that moment is more clear now since we analyze these earnings reports daily. It's now more evident, more self-evident than ever, because tariffs are definitely messing up, smaller size companies' profits. They're even messing up big company profits if they are in the real economy type environment. So, and that trend is just beginning, and it is not priced by the market. And these multiples in the market will absolutely have to be readjusted, reevaluated, slashed. I mean, you're going to see an entire mispricing, repricing of the market right in front of your eyes. And when it begins, there's going to be absolutely no stopping. So you want to hit some 10, 20, 50x trades this week or next week, you come to 13 Market Moves and sign up, or reach out to your coach and send him a message and say, hey, man, I'm ready to roll, because it's like market conditions are remarkably rare when it just seems like everybody's asleep, yet it's everything that's in black and white that, companies are taking big hits, and yet, the indexes are at all-time highs, like nothing is going on because, the AI story is intact. But guys, it's just, it is close. I'm telling you, this shit is remarkable, and the market opportunities right now are absolutely out of this fucking world. So, watch out for the job report. It's probably going to be another fake one this Friday on August 1st. No shocker. I mean, they're able to manipulate these reports, but guess what? They can manipulate the job report all they fucking want. Okay? When companies' margins are declining due to higher costs, okay, guess what they're not doing? They're not hiring people. So they can fucking produce another fake damn job number this Friday. And then guess what? Sure enough, they're gonna readjust it a month later. They've been doing this and getting away with this crime every fucking month on job reports. The question is, like, what, are they so fucking bad that they cannot figure out a legitimate way to calculate the job reports? Like, is it that fucking difficult? Are you really just gonna be that fucking bad at calculating job numbers that you're gonna be off every month by approximately 70,000 fucking jobs? You're gonna inflate number by 70,000, and then a month later you're gonna say, oops, we were off a little bit on our math. The actual job number we gave you last month was actually by about 70,000 jobs less. And in some instances, it's by 100,000 jobs less. Okay? And they've gotten away with it fucking last year, and they're doing it again. And, like, at some point, I think, you don't look at that shit anymore. You look at what actual companies are reporting, and what they are reporting, man, it is a catastrophe. I mean, the market is in full-blown catastrophe as far as real economy. So all them bullshit reports, man, you can't trust a fucking thing that they're saying. Right? But you can trust what you're really seeing around you and what you're really seeing in these companies' reports. And I'm telling you, this is just the beginning. Like, profit margins dropping by 30% for Starbucks? Like, fuck this, that's just the beginning. That tells you how bad shit is, okay? We're talking about people going and having a cup of coffee. Oh, fuck. How much more basic of a real economy business can you be talking about? And their profit is down 30%? Like, Nucor CEO, right? Well, all these tariffs supposed to be good for Nucor. Steel, aluminum, company. So during the interview recently, Nucor CEO does an interview, and he's like talking about how, oh man, these tariffs are so good. We're going to do so fucking good. This is the greatest thing that ever fucking happened. And then throughout the interview, he keeps saying the word higher prices, higher prices, higher prices, higher prices. And like the person that interviewing the guy, she's like, well, so, these higher metal price, they're helping you. Oh, yeah, this is fucking great for us. I mean, then, okay, if higher prices are better for you, why the fuck are you selling less? How can that, how can that be good? Anyways, he kept saying the words higher costs, higher prices. Dude, I didn't count it exactly, but he must have said it like good bit, like 24 times within like a 5-minute interview. So you don't even have to go. They're going to tell you, oh, inflation is under control. You got these fucking CEO of an aluminum company in 5-minute interview mentions the word higher prices, higher costs 24 fucking times. What kind of inflation report do you need? Just hear what fucking people are saying. Like, that's not a coincidence. Yes, inflation is absolutely going to get out of fucking control. And if Trump really wanted the Federal Reserve to lower interest rates, guess what Trump should do? Okay? Fucking stop manufacturing these bullshit economic reports. Yeah, GDP at 3%, unemployment perfect, inflation down. Yeah, you want the Fed to lower the interest rates? Show them the real fucking job report this Friday. And then Fed will, I promise you, then Fed will cut the rate in September. But you keep manufacturing these bullshit reports that are not a reflection of reality that's happening now. The Fed ain't gonna do shit if the economy's so good. Why should the Fed cut rates? And then why does Trump want to cut rates? Because he knows the economy's in total chaos. It's total shit, man. And now you've seen in the earnings reports day after day a confirmation every day how bad things really are. Yet a handful of companies are able to sustain the market at its current levels and even just grind it higher every day by a couple of points. So guys, this is the point of greatest trading opportunities. I don't wish for you to miss them. So hurry the fuck up and get in touch with 30 Market Moves. Sign up to trade with a coach. Get ready to fucking go 50, 100x over the course of the next 90 days. Do it big or don't fucking do it at all. Let's roll.